Guys, have you ever noticed how easy it is to fall into this trap? So one candle goes up, you want to buy. One candle goes down and you want to sell. The problem is you are reacting to noise, not to the trend. So today I'll show you one of the most basic and one of the most useful tools for reacting trend direction, the moving average. So you will understand why MA smooths chaos, the real difference between SMA and EMA, and how to use them to find entries based on slope, support, and resistance, and of course, crossovers. And at the end, we will lock it in with real trades. I'll open a few positions and explain out loud why exactly I enter there. A moving average is a constantly updating average price over a selected period. It smooths out random short-term fluctuations and helps you see the bigger picture. So is the market trading up, trading down, or moving sideways? That's why both beginners and experienced traders use MAs not to react to every move, but to stay focused on direction. Here's an important point. The moving average is a trend following, lagging indicator. It's calculated from past prices, so it will always react with a delay. And the longer the period, the more lag you get. 200-day MA is much slower than a 20-day MA. But that's the trade-off. Longer MAs show the overall market bias better, while shorter ones react faster. And another key is the moving average often acts as dynamic support and resistance, especially during strong trends. The two most popular types of SMA and EMA, guys. SMA at a simple moving average is exactly what it sounds like, a simple arithmetic average of price over periods, and EMA, exponential moving average, that gives more weight to recent prices, which makes it react faster to new moves. SMA is calculated very simply here. So for example, take the last 10 candle closes, add them up, and divide by 10. Because of that, SMA is great for showing the average market temperature, but it can be slow when price changes sharply. EMA, why it's faster? So EMA focuses more on recent price action. It uses a smoothing factor that makes the latest candles more important. So that's why active traders often prefer EMA. It adapts faster to market changes, but it can also create more noise compared to SMA. Now let's talk about how to actually use moving averages in real trading. So the first one, trend, suppose the MA is sloping up, so the market has bullish bias. If it's sloping down, bearish bias. The second one, price position relative to MA, classic reference. So when price holds above the 200 period MA for a long time, it's often seen as a sign of a long-term strength. The third, crossovers. When a short-term MA crosses above a long-term MA, that's a bullish signal. And when it crosses below, that's bearish. The fourth, so the golden cross. One well-known example is when a short MA like 15 crosses above a longer MA like 50. So this pattern is often interpreted as bullish, especially when supported by volume. Moving averages don't predict the future. They reflect what has already formed, and that's pretty normal, but it's important to remember. MAs can lag. They give false signals in choppy ranges. So it's best to use them as part of a bigger analysis, together with market structure and context. Moving average is a tool that helps you remove noise, identify trend direction, and understand where price often react as support or resistance. And MA works best when combined with other tools. For example, MA defines the trend, while RSI or MACD can give more precise entry confirmation. And by the way, you can already find guides on RSI and MACD on my channel. I will leave links to those lessons in the description, guys. And now let's move to the practice. I'll open a few trades, look at the crossovers, analyze the slope, price, position, and check confirmation from structure. So guys, we moved to the broker now, and I already selected all the assets that I'll be analyzing and trading today. And I'll be trading company stocks and this is the set of stocks I've chosen. As you can see, almost all of them currently offer the maximum payout percentages, which means the price action on these charts is more stable. And by the way, let's move on to the moving averages. I already selected two moving averages, and now we'll go through their settings, starting with the first one. And since we're not trading with long expiration times, meaning we're not holding long-term positions, but working on short time frames, well, the settings here will differ slightly from the classic ones. So we'll be opening trades with a 3-minute expiration time, and we're analyzing the charts on the 1-minute time frame. So meaning each candle represents 1 minute of price movement. And accordingly, we don't need 200-day or 50-day moving averages here. I think that's very logical. So let's go to the settings. And for the first moving average, we chose an exponential one because it reacts faster to changes in price dynamics, as we discussed earlier. And we set the period of 21 and choose a turquoise color. And this will be our long moving average. Next, we configure the second moving averages. And again, we chose an exponential one and set the period to 9. So this will be our short moving average. This color is purple, and we click save. And guys, this is how these moving averages look on the chart. And as we discussed earlier, the main focus here will be on moving average crossovers. And we're gonna open trades for $150. So I'll start the analysis, and as soon as I found a suitable entry point, we're gonna continue. Well, let's begin. And let's stop at American Express stock. Here we'll open a sell trade with a formation of a new candle and the last seconds. And we're opening a $150 position for 3 minutes here. So with this rectangle, I've just marked the level from which price previously bounced. And however, in this case, I assume this level will be broken, and we are not looking at the global trend in just broad sense here. So since we do not have large period moving averages, but I'll explain the entry logic now. So first of all, guys, we still pay attention to the trend slope and add an element of technical analysis. So here we see a strong bullish trend, and after which, against the background of strong bullish volume, a global high was updated, and it was exactly at this point that the trend started to reverse. Then we see a pullback, and next the price just goes downward. Yep. And why I'm highlighting this level? So because price previously reacted to this one as well. So in the first case, price just bounced from it and moved upward, and then the level was broken, so we no longer consider it a strong level from which price would bounce. And then we see another breakout, and followed by a pullback and another move upward. So in other words, the level becomes just floating. And the most important thing here is the moving average crossover. So the short moving average crossed the long one from top to bottom, which is sell signal here, a bearish signal. And that's exactly why we're opening a sell trade. And as you can see, the level was broken, just as I mentioned a few seconds ago. and there are about 30 seconds left until the trade end. And let's look at the result. We'll wait, and then I'll add my comments. And the final seconds, and the trade closes very confidently in profit. I think everything here was quite obvious, and we focused specifically on the moving average crossover and got the signal from it, while also analyzing the overall price dynamics, since we didn't have additional indicators that could confirm the entry, the volume, or oscillators. So guys, just let me remind you once again here. Yep, so some information. If you use moving averages, it's highly recommended to add an additional indicator, for example, MACD, RSI, or another oscillator that can confirm the signal through overbought or oversold areas. Still, you can see the results for yourself. Within just 4 candles, yep, the price confidently moved downward and broke the level. Good. Let's analyze one more trade and I will continue with analysis. Well guys, don't forget to join my Telegram group, and also don't miss the chance to get deeper knowledge in trading and learn together with others. And you know just that I regularly share articles on various trading topics, updates from the trading world, and a bit of my lifestyle too, so I'm sure that you won't get bored there. And you know, if you want to become a part of my team, I get an exclusive Traders Club where every trader receives personal trading advice and 24/7 support. So plus there is daily trading sessions with me and my team. So what should you do? To apply, just send me a private message with Rachel Club Plus, and either I or my manager will get back to you. So guys, now let's get back to trading. Now let's stop at the next company's stock and open a buy trade. And I will say right away, guys, that there is maybe there is a chance this trade could close at a loss. Then why did I open it for 150? Oh, so this is why it could go negative, because the trend here is quite difficult to analyze, yeah, and it's not entirely clear where the price will go. And if we look at the whole picture, there is visible bearish trend that is downward, yep. But if we focus specifically on this section of price action, we can assume that a potential reversal may be starting right now at this point, because global low was updated, after which the price began to show bullish dynamics. So it's possible that this is indeed the formation of a local reversal for further upward movement, but we do not really have strong confirmation, and the only factor we rely on here is the moving average crossover. So the purple line, the short moving average, so that crossed the turquoise one from bottom to top. So that's the basis on which we open the position, yep. And also we see a small pullback, after which there is a potential for the upward movement. Of course, the situation is quite tense right now, and the current candle shows that pullback could start at any moment, and this is exactly where additional indicators are needed. So MACD, RSI, CSI, stochastic. So they help determine entry points more precisely. But guys, as you can see, even without them, with proper analysis and experience, it's really possible to trade using only moving averages. And yeah, they didn't. So the position closes in profit. And we got exactly the result we talked about in the theoretical part. Yeah, determining the trend slope here is difficult because trades are open for only 3 minutes, and using 200-day moving average here simply doesn't make sense. So we're not analyzing the global dynamics of the asset, and we just breaking down a specific trading trading method in real time. So we analyzed two trades based on moving average crossovers, and both ones closed in profit. The first position worked out especially confidently, so there was also a level breakout that we could rely on. And in the second trade, there was a pullback that I was worried about, but since the entry was made at a reasonable level after the uh, formation of a just bullish momentum and good volume, the trade also closed in profit. And as a result of these two trades, we locked in almost $250 in profit. So pretty great result, excellent result, I would say. So by the way, let's maybe withdraw this amount. So we go to the withdrawal tab and take this one. So in use the T tether. So we'll enter an amount of 230. So let's say for a restaurant visit. So we paste the wallet address, enter the Google Authenticator confirmation code, and click continue. Okay. Great. So the withdrawal operation is being processed. Now we just need to wait for the funds to arrive in the account. So that's the practical part, guys, we ended up with. I hope my thoughts were useful to you and that I managed to explain everything in a simple and clear way. So that's all, guys. Thanks everyone for watching. From this point on, you have a solid base. So how to read charts with moving averages where price is relative to the MA, and how to understand crossovers without panic. So the simplest tools are often the most powerful. The moving average helps you stay focused on what really matters, the trend. And guys, if you enjoyed this theory plus real practice format, support this video with a like and subscribe to the channel. So thanks guys everyone for watching. And if you want to trade in similar live sessions inside a private community with me and my team, you know where to find me. So all the links are in the description below this video. So just message me and see you soon. Bye.